the risk of recession at this point. Diane Swonk, KPMG chief economist, joins us now. Huge sigh of relief yesterday, Diane, when the president paused with the high tariffs, the high reciprocal tariffs all around the world. But we do have some tariffs still coming into place. And we have a very favorable backdrop, as we learned from inflation and jobs. So what's your outlook now?
Well, actually, the tariffs that are in place as of today are higher than we thought they would be, announced on April 2nd. And that is because of the move up in tariffs on China in particular. That those stay in place, over 100% tariffs on China, along with the 10% across the board, except for Mexico and Canada, which have their own tariffs they're dealing with. Altogether, that puts the effective tariff rate at a record high, about 30% right now. That is something we've not seen. 1899 was the previous record, slightly below that. And I think that's very important to remember. And I think that's part of what financial markets are starting to sort of digest, is that the pause is not an end to the trade wars. And in fact, we are now at a higher rate than we were just a few days ago.
I know a lot of people calculate that differently, the effective tariff rate. I pointed to Pantheon's model, which was at 17%, because they assume that 90% of the imports from China will be rerouted or just simply go away because those tariffs are just so onerous. So they were looking at a lower rate.
Well, the one thing the administration did attempt to do was try to stop some of the movement through what we call connector countries as well, with another executive order later in the day. So I think that's important as well. And we also know the Chinese will subsidize some of the tariffs so that they don't have as big of a blow. But at the end of the day, no matter how you cut it, it's still very high tariff rates.
Sure.
And it is on consumer goods, which flow through more to inflation. So the good news we saw in inflation today, especially on goods, is likely to be the last good news we see before the full effects of tariffs kick in over the next several months.
So fast forward a few months, Diane, which do you think will be a bigger problem, inflation or growth?
Well, they'll both be a problem, and that's what puts the Fed between a rock and a hard place. We think we are within months of flirting with recession, and that's a very hard place to be at the same time that inflation will be picking up. The Federal Reserve has made clear that they can't just look through these tariffs given how large they are and the uncertainty around how much they'll actually show up and stick around. Remember, the Fed is still burning, and so are we, from the inflation that we saw post-pandemic and their late reaction to it. They can't afford to have the tariff-induced inflation become a longer burst of inflation that becomes more stagflation, which is a term we've not seen since the 1970s, but something that's very much on front of mind of the Federal Reserve.
Bad word for markets, for the Fed, for the president, for everyone. Diane, though, are you factoring in that pretty negative view, I would say, on the economy, an extension of the tax cuts, some sort of passing of the budget, deregulation, potentially investment into the United States if we do see him work out these trade deals in the next 90 days? It could mean a lot of countries like Europe and others buying more U.S. energy and U.S. products.
We do have an enhancement and extension to tax cuts. Those hit the biggest in 2026. The sequencing of these policies really matters as well, because the good news from that doesn't hit until 2026. I think that's important. The other issue is this whole episode has added to uncertainty, and uncertainty is its own tax on the economy. That's doing its own damage, and that's something we're very concerned about. Also, it's very hard for firms to commit to onshoring, which is one of the stated goals of the tariffs, when they don't know with an executive order that they could be changed with the stroke of a pen. And that uncertainty has not gotten any lower in recent weeks. In fact, with the events of yesterday, it just got higher. And I think that's one of the problems with, trying to use tariffs as a silver bullet to cure all that ails us, when it's really more of a weapon of mass destruction with a lot of collateral damage at the levels that we're talking about.